AT&T just announced that they're going to be spinning off WarnerMedia, which they actually just acquired 3 years ago, marking a pretty significant and quick reversal of that decision. And it's going to be merged with Discovery to create a new streaming media company. In this video, I'll do a quick walkthrough of what exactly this all means for AT&T's stock and whether or not it's worth buying if you don't already have AT&T stock, or worth selling if you already have the stock. So stay tuned. Hey folks, Richard Walls here. If we're meeting for the first time, what this channel is all about is helping you with career development and personal finance. So if you want to advance your career or grow your income, then consider subscribing down below and hitting the notification bell so you get notified of when I post new content. So with that said, let's get to it. So with this news, how did the market receive it? What actually ended up happening with the stock price at the end of the day? Stock price ultimately ended down for the day, actually fell a little bit further after market hours, but really when you look at the stock price longer term, at least going back to early 2020, you'll see that this move is actually fairly immaterial. It's really inconsequential, at least when it comes to the stock price. It didn't really move a lot. Do I think it's a good move? Well, I believe it is. I think the spinoff of WarnerMedia is a good move. I believe that the acquisition itself shouldn't have happened in the first place 3 years ago, but that's neither here nor there. I think there are a number of assets under WarnerMedia that I think are not as lucrative now as they might have been before, but the crown jewel in this whole deal is actually HBO and HBO Max. This is what AT&T had been talking about for a number of years. If you look at all of their quarterly earnings reports, one of their priorities or one of the focus areas in terms of media has been HBO and HBO Max as a streaming service, and you've seen subscriber base continue to increase substantially, and that has become one of the more dominant players in streaming. So this is definitely I would again call it a crown jewel for WarnerMedia. And when it comes to spinning this off or merging it with any other entity, I think that's where a lot of the value is being derived, is from HBO and HBO Max. But the bottom line here is that there is a really good opportunity here for AT&T to unload an asset that still has a good amount of value so that they can reduce their debt load and they can focus more investments on their core competency, which is telecommunications. And really in this case, what they have to look forward to in the future is expansion of 5G and fiber. Now, one element of this stock that I'd like to point out is actually the dividend yield. At this point in time, it's a little over 6%, which is really not bad at all. However, part of this spin-off also includes the intent to also lower the dividend payment to better reflect what the income will look like in the future once they spin off this asset, because again, this is a multi-billion-dollar business that they're removing from AT&T. Their operating income will be less, and so the dividend payout will reflect that. So again, not knowing exactly what the stock price is going to be when this whole deal closes, which is going to be middle of 2022, the dividend I can anticipate it would be less than what it is now. So the 6% you see today will likely not stick around after this merger is complete. Now, what does this mean in the short term? Well, in the short term, I don't expect this to produce any kind of meaningful moves for the stock price. Again, like I mentioned, the market reacted not so favorably in the short term. I believe that's more or less noise. And again, when you look at the long term, not a big move, not a big swing in stock price. In the short term though, I would expect that the stock price will continue to climb a little bit. You've got to keep in mind, we're coming off of really low lows last year. And since then, it's made some improvements, but really I think what's going to determine the stock price in the near future, let's say the next 6 months, will be what kind of communication comes out with regards to either maybe new details or more details on this merger, and what news will come out with regards to their efforts in 5G and fiber. In either case, the best that's going to happen is you'll see the stock price climb a little bit, not too much, I would say in the realm of $5, give or take, throughout the rest of the year. But ultimately, the stock price will stabilize. In the long term, however, I still don't see a whole lot of upside. You've got to keep in mind, this is not a growth stock. And seeing as there is quite a bit of competition from many other players like T-Mobile, Verizon, Google Fiber, I would even count Starlink as a potential competitor in the not so distant future. So there are quite a bit of headwinds for AT&T when it comes to their 5G and fiber expansion. Will they be able to do it better or far and away better than competitors, or will they be in the same pack, so to speak? That is to say, they're not really substantially better, they're not substantially worse, they're average. So as it relates to the stock price, you can also likely expect fairly average returns for a company of this size in this industry that's been around for as long as it has been. As an income stock, on the other hand, this is where it becomes a little bit more attractive at the 6% plus yield that we currently see today. So it's not a bad stock to have in a more well-rounded portfolio. I certainly, again, as I mentioned in other videos, it's not usually a good idea to have all your eggs in one basket, but again, as part of a more complete portfolio, this seems to be a fairly decent option in terms of an income stock. Now, I don't know what this is going to look like in the future, but I can imagine that if the intent is to have a lower dividend payout because you're getting less revenue and less income from this WarnerMedia group and HBO Max, all that stuff, which is multi-billion-dollar business. And if the stock price continues to climb, granted not by much, but climb nonetheless, you can expect that the dividend yield is not going to be what it is today, which makes the stock less attractive from that standpoint. There could be better stocks out there for income purposes. So long-term as an income stock, it's a bit of a question mark, but I don't see a ton of value there. So if you're looking to buy this stock, I would temper your expectations on what the stock price will do and what dividend yields will look like in the future. If you're looking to sell the stock, you may want to explore that as well, but I wouldn't say that there's a whole lot of rush in doing so. Really, if I had the stock, which I don't, I would be inclined to hold on to it and see what happens over the course of the rest of the year. See what kind of new details come out about the merger or 5G or fiber, see what kind of progress is made there. Reason for that is that I don't really anticipate the stock price falling really a whole bunch from where it's at now, just like I don't expect it to climb a whole lot from where it's at now. And because I don't anticipate the stock falling too much, in the meantime, you can still collect a fairly good dividend. In either case, as I always say, I'm not a financial advisor, so make sure to do your due diligence and invest at your own risk. Folks, let me know in the comments below what you think of AT&T as a stock. If you think there's some value there, if you think it's going to continue to be a good dividend play, let me know down below. I've said my piece, and with that, thank you for watching, and I'll see you around.